Good morning, traders and investors around the world. Welcome to this Monday, July 25th edition pre-market prep with Stock Odds. Sorry for the delayed start, little technical difficulties after the week off, but we were doing okay, folks. We were trying to hang around green, and then it was the old Russia. Gazprom says it will halt one more engine at Nord Stream 1 gas pipeline, and they flushed the S&Ps. They went down, though. They went down to 39.51. And if you guys know how to follow my technical analysis, you were looking at the pre-market low at 51.50, and that is holding us up for now, but feeling a little bit heavy. Crude couldn't hold that close from Thursday, up 40 cents at 95.10. Gold being gold, that's down 11.90, 17.50, 70. Silver in the red by 37 cents, inching toward $18 an ounce. Bitcoin giving back some of those gains from last week, down 850, 21,765. Euro dollar futures, they're down not as much on a percentage basis. They're down $14.50 at 15.1450. Let me stop the screen share. Let's bring in the master of stock odds, Rob Friesen. Rob, how you doing and how was your week off?
Not bad. I had a week off. Yeah, that was good. Thank you,
A
Joel.
week off from me. A week off from me. I'm sorry. A week off from me.
That was good. Did you have a good week off?
Oh man. Swimming, biking, golfing, hiking, eating, swimming, biking, golfing, hiking. That's what I did for 1 week. But yeah.
So you decided to take the lull week off, and then now you're back for all the things that are packed into this week. We've got like 169 of the S&P stocks reporting earnings. We've got Fed announcement. We've got some economic reports.
GDP.
We've got month-end seasonality. I mean, it just goes on, right? So it's a packed week, and it can be tough to navigate. There's no question. No matter how many tools you have, whether you're technical based, fundamental based, whether you're quantitative based, it can be a challenging week. So
yeah, big numbers, big. I mean, you talk about 40% of the S&P 500 reporting, all the big guns reporting. That will be the tenor. Last week, you had the big rally without me last week, Rob. Was that just some mid-July seasonality, or
no, we planned
what
that.
the hell?
When we planned that when you were gone. I mean, it's great, right? Like, because you hold things back, you get kind of short biased with these e-minis you trade, so
Actually, I was long biased the week before I left, and I did okay.
Okay,
But
that's good.
no, after that price action on Friday, little sell off, little trepidation. So yeah, I was leaning to the short side a little bit this morning, but no, nice rally, nice quarterly numbers we got to. A really important week for the market. I don't know if you can look at it from a stock odds standpoint, an earnings standpoint, fundamental economic data standpoint. Big week here for the market. So, what do you got for me today?
Well, I mean, no, interestingly enough, here, let's share the screen here. Screen two. So, we had been talking about preparing for a summer rally. I mentioned that quite a few times on our shows previously, right? So even though the sentiment in June was, terrible, like 50, we did notch up a little bit in July, but it just, the first 6 months of the year are one thing, the second 6 months can be another thing. A lot of times things culminate in June expiration or the Russell rebalance. And so, when you see that, you kind of prepare yourself for a pivot, a possible change. And we did see a rally there that actually took us, up towards this 2.7% for the month, which is now, going to be contested this week as we pull back a little bit. Last year at this same time, we actually overshot the 2.7%, and we were at like 3.2, and then just on the last day of the month, it pulled back to close at about 2.6% up for the month. So There is a theme. You can go through the seasonality almanac and look at how each month is expected to perform, how it performs through the month. So just to note here, the last, 5, the last 3, the last trading day of the month in July are generally softer. So even regardless of what's in the cards for this week regarding earnings or regarding the Fed and all that, this is typical for the month of July. So is seasonality important? Yeah, it's a good umbrella. It's a good backdrop, a good context to what we do. So I'm going to show you, how I approached today with a combination of seasonality and odds, specifically related to percent B, and also with the just sort of this backdrop of things being possibly softer at the end of the month. So just kind of putting it all together here. So first of all, let's look at the seasonality for the ETFs for July on the last 5 trading days of the month. So I'll focus specifically on XLE because we have the volatility in the energy complex, and it's also tough to read it from day to day without some statistical backdrop, without some macro kind of thoughts as well. But how do you know when you come into the week or come into a day, what you should do? You then have the pre-market activity, like you mentioned. We had a pre-market low, we popped up, and we've kind of come back to test it again. These pre-market things are important, and yet you can have reversals from something that was strong pre-market suddenly becomes weak for the rest of the day, or something that was weak becomes strong for the rest of the day. You also have things that fill the gaps if you take, and have a pre-market gap. So let's focus on XLE. We have odds of 75 of performing softer for the week. Okay. And again, that doesn't necessarily take into account the macro that's going on right now with Russia and stuff like that, and just pipeline disruptions in general, or supply chain disruptions in general, or demand destruction, or recession, and all these other factors that we got to deal with. We just look at that umbrella over this week that energy is supposed to be softer. So then I have that. Okay, I already know what to expect for the week from a seasonality perspective. And so then you can look at the odds specifically on XLE related to, say, RSI or percent B, and it also agreed that where we've come from, what happened last week, and on the back of that, this week should be softer as well. So there's some complementary ducks lined up. And then pre-market energy was showing up, right? As well as some of the stocks. So here's Chevron. Here's Chevron. So it opened up, along with XLE opened up and pulled back to, possibly almost, maybe it had in its mind to test the previous close. Chevron did it exactly, tagged the previous close. So I actually shorted Chevron at the open, and I covered literally right there. I mean, you can't have a more perfect trade than that, and it's not always going to happen like that. But that's what's called a gap fill. We had premium in the ETF. Chevron's a member of the ETF. The ETF backdrop for this week is softer. Chevron's backdrop for this week is softer. Chevron's backdrop for today is actually softer. So let's see if I have that up here. Here's the odds on Chevron for today. This is percent B. So this is standard deviation related, proximity to the Bollinger Band. Looking at open to close for today, and it has odds of 43.1, average performance negative, sharp negative. Been 72 events in that look back period, so that's 2,000 days. So it's had plenty of samples to qualify that. And so, when you get an opening premium like that with so much expectation of what's going to happen possibly for the week. And so here's the thing, you can look at it and say, I have an umbrella that's over everything. Okay. And that is the weekly probabilities are softer. And then for the day, the probabilities are softer. But my starting point in the morning is one of premium. And that's where the opportunity is to go in and take advantage of that, regardless of what happens next. And then that's your first trade. So, over the years, we found the most rewarding trades to be within the first half hour of the day, right?
Yep.
But you got to be there to participate.
Yep,
No different
sure.
than Boeing this morning was already showing down pre-market softer with a little bit of backdrop of news. For you to say, okay, maybe I won't buy it or short it at the open, but let's see what happens next. That opening range breakout was to the downside right away, and so it before it did anything else, it just dropped, and so that's why, either from a tackling and jumping on that relative strength immediately, or from a case where I'm doing pre-market observation and selling the opening gap, or buying the opening gap on other days, these are just opportunities, but you have to be prepared. And so when you have a statistical backdrop, it just gives you the opportunity to get in there and create these if-then statements, right? And even if you're wrong, I mean, you can still deal with it, right? Like, for example, if you had said, well, I'm going to stay short XLE all day, well, it's giving you some opportunity to probably get out at a break even or better. It's still chopping around. But the best trades often are when it gives you your return in that first few minutes to half hour, and that's something that professionals have used all through the years. Is they've used the open print, they've used the movement that happens after the opening range breakout, the gap fills. But when you have in your mind already that kind of umbrella over the situation, that just helps you get in there and actually do it. It gives you a reason to execute. And, in this case, it worked out both from the ETF basis and some of the stocks associated to that. And it might be finishing strong today. We have macro considerations, like you were shouting at Russia before we got on the call, right?
Yep.
So what did Russia just do?
They says it halts one more engine at Nord Stream, Nord Stream 1 gas pipeline. So basically, they're trying to squeeze Europe with the natural gas.
Right. And so, this could be strong for most of the day, and you could also look for a pullback later on. And the other thing is, we have context for the whole week, so something could definitely change as we go through the week. But that's what I want to really point out in this show today, is that it'd be no different than if you were approaching a dividend on a stock, and you want to, you really want to benefit from that kind of money flow that sort of usually heads into, a dividend paying stock, especially a good one, very robust, like, before Coca-Cola pays a dividend, sometimes before Chevron pays a dividend. They do have some upside. And your goal then is, you're favoring the long, you want to participate. So what are you looking for? You're looking for that discount open. You're looking for pullbacks through the day. You're looking for, a potential gap fill. And then you get involved. So you have your backdrop. You want to participate with the potential money flow into the upcoming dividend, but you want to do it on your terms. You want to do it on your price, right? So that's the key for so much of this. And then there's the other aspect of divergence. How far has something run, before you have a seasonality window? So let's say as you go through these seasonality things, especially with these ETFs, how far have they already moved prior to this last 5 trading days? The ones that have had the greatest divergence could give you the best mean reverting opportunity, meaning that, something that's been way up is coming into a seasonality window where it's softer. That could be a great short. Something that's been way down, like, I'm keeping an eye on silver and gold. I know that the Fed raising rates is not good for them at this present time, but I'm always keeping an eye on something like this where the seasonality is there and they're so discounted, because those could be massive opportunities. But I also don't need to just go blindly, when I'm aware of the macro that's pushing on them at this particular time, which hasn't really been there in the past. If you look back at seasonality for silver and gold over large sample, you see that they do tend to perform pretty well in the last 5 days of July normally. So again, just be balanced in, allowing the macro to exert that gravitational force or that alternative force on some of your other probabilities, and that's just what we have to do. We have to hold these things and juggle them, and it's kind of like an orchestra or a symphony. It's not just one singular, you can't just have an orchestra with drums, right? You can't have an orchestra just with the saxophone. I mean, you need all the components there working together, right?
Okay. All right. I'd like to set up there. Also the emphasis on the early trading. We matched that pre-market low, folks, and we're just dancing around unchanged. So the market took that Russian news in stride as we speak. So just dancing around unchanged. We need to get a bid here at 65 and get up and take out that intraday high. But it looks like we got some work to do in the 39.60 handle. That's pre-market prep with Stock Odds. We're back July 25th, back with you tomorrow. Thanks for joining us.